Jake, the crypto goat. Australia whiskey time again. All right, that's what I'm talking about, brother. Raise a glass. I don't have one. My wonderful wife hasn't brought me the tea yet, but I'm sure she probably will. What needs to happen when Japan yen for reverse carry trade to kick off? How close are we? Is that part of 500 or 600 number you checked last week? So that was not the number. I'm not sure what you had me looking at for 500 or 600. So I look at a couple different things when it comes to the reverse carry trade. And we just put a video out about this, kind of talking about XRP as a liquidity buffer and why that's going to be able to mitigate the volatility and potential credit crisis when the reverse carry trade unwinds. So if you haven't seen that video, go check it out. It's kind of a high level, just simple explanation as to how this would actually work and play out when it inevitably will. But things that you want to look for. You want to look for downside in the Nikkei. So last year in August, when this began to unwind, you saw a big move down in the Nikkei, which is Japan's stock market indicator, their index. Prior to the open over here in the U.S., there was I don't remember what the loss was over there. Before I went to bed that night, it was at like 7.5% or 10%. It was somewhere in between there. And it continued further over their day, our night here in the U.S. Then we woke up, to our stock market futures being way down. And that's because people were already, liquidating positions as fast as they could to be able to swap back to the dollar to then swap to yen. So you got that. So that's one indicator. Another thing that I look at pretty frequently is the 10-year bond yield or treasury yield there in Japan on their JGBs. So right now it's been hovering somewhere between 1.5 and 1.6. When you see a move higher, significantly higher than 1.6, a 10% move to the upside in those bond yields, things will break. So maybe even a little bit more than that. Might need to be 20 or 25%. But you're going to see the bond yields move pretty drastically to the upside there in Japan. And again, I think all of this is predicated on oil. I do think that there's going to be some type of conflict in the Middle East or somewhere else in the world, some crucial choke point for the transportation of oil that could be cut off. We talked about the Strait of Hormuz earlier this year when there was conflict between Israel and Iran. I still think that could probably play out, and will be the catalyst that pushes Japan. You might think, well, why would that push Japan to raise interest rates? Well, if they don't, the energy cost on top of the inflation that they've already created in their economy would choke people. They wouldn't be able to handle it. So the only way that they can offset that is to raise interest rates and cause their currency to appreciate substantially. Now that causes a cascading effect across other economies in the reverse carry trade, but that's really the only circumstance in which they're going to have to raise rates aggressively, and that's why I think that's the most likely one to play out if this is going to occur in a short-term time frame. Okay. So again, watching that 10-year yield, other people look at the 30, the 40, other bond yields there in Japan. I like to watch the 10. If it gets, 1.65, 1.66, and is moving to the north, I think that's when you're going to see things start to unwind pretty quickly. We're at like 1.56 tonight here in the U.S. today there in Japan. So not necessarily a problem right now, and that's because there's the Bank of Japan has instituted bond or yield curve control. So they print more money in order to be able to buy bonds to be able to tamp that down. The Bank of Japan owns more of their own treasuries and bonds than anybody else and has for a long time. Again, this kind of goes back to them issuing the CBDC, like I talk about there in the video that I put out as well. And then if you look at the yen versus the US dollar, right now it's right in the middle of the channel that it's been trading in for a long time. So between 160 yen for 1 US dollar or 140 yen for 1 US dollar, either one of those has kind of been the, like if you're bowling down the lane and you had your bumpers, like it bumps off those and tries to stay in the lane. That's where the Bank of Japan's been keeping it. Outside of that, either direction is where things get pretty wonky. So they're going to do everything they can to protect the yen and keep it in that channel. If we do see the yen appreciate substantially against the dollar, that's when things are going to get not so great. If you saw, again, them raising rates aggressively, their currency is going to appreciate against the dollar. It's going to be more expensive to swap dollars back for yen, and that's why people would aggressively sell positions, swap back to dollars and swap to yen, because, well, they need to be able to get across that line before it's a problem. So hopefully that gives you some indicators to watch for, some things that would likely be precursors to everything kind of unwinding, and I do think that it'll happen very quickly when it happens. Nicole, hey ma'am, she says, hey Jake,